Hi, in this video I'll take a look at order types and give you a brief overview of them, as we do have more explicit videos on other order types in our series. When you speak of order types, there's really only two camps of orders that you can be talking about. You can be talking about instant execution or pending, or sometimes pending is called contingent orders. And an instant execution type order is obviously just to get into the market at whatever available price there is. Now, typically this doesn't cause too much of a problem. It depends on the financial instrument, but you can get a little bit of slippage. So that's the one inherent danger of an instant execution order. Typically, those are most dangerous following some type of shock to the markets, or perhaps a news announcement that was a bit surprising, non-farm payroll, that type of thing. For the most part, using the MetaTrader 4 console here, the trading platform, you're not going to get slipped too much during average trading. As I go ahead and pull up a trading order here, you can see that, and this full disclosure is after the markets are closed, but you can see, like in this particular case, I'm looking at the gold markets. There's a spread that's stated there. You just go in and you buy instant execution. You do, however, have pending orders, and there are a multitude of different types of pending orders. And this is true with all platforms. So this isn't just MetaTrader 4, it's just that this is our example, and we know that this is the one most of you will be using. In the pending orders, you have, in this particular case, 4 trading opportunities as far as different types of orders. MetaTrader 5 tends to have 5, 6. Some other platforms will have dozen, maybe even more. And a pending order is essentially anything that needs a certain set of conditions to be placed on the order and then met in order to fire off. The most common pending order is a stop loss. For example, if I decided to buy here and I decided underneath these candles that the trade was wrong, it was going against me, I wanted to get out, then I would have a stop loss order, which is a pending order. It doesn't get fired until I break down to that level. Now, there's various types that can be more specific than just get out of the market down here. It could be get out of the market at this price or better, or if we rise up here, buy at this price or a better price, or only buy if this is hit by a certain amount of time, that type of thing. Those are all pending orders. 99.9% of the time, an instant execution order is going to be okay, unless it's a very illiquid market. However, it should be stated that you should always have at least one pending order, and that's a stop loss. Some traders don't trade with them, and that tends to be very reckless. You can go to bed, find out something happened overnight, and you're now down 90%. You obviously don't want that, so there is a call for both of these. But really, at this point in time, the one thing that you do need to understand is that there are two groups. There is the instant one, which is just what it sounds, and pending means that there are certain conditions that have to be met.